Well, it's time now for business, and for that I'm joined in the studio by Stephen Carroll. Hi, Stephen.
Hi, Haxie.
Now, we're starting here in France, where the government is pouring cold water on a potential takeover of supermarket giant Carrefour.
Yeah, that's right. France's biggest supermarket chain is in preliminary talks with the Canadian convenience store giant Couche-Tard. A deal would value Carrefour at 16 billion euros. News that sent the company's shares soaring by over 13% on Wednesday. But France's finance minister doesn't share that excitement over a potential takeover. He told the C'est à Vous programme on French television that France's food sovereignty was at stake and that he was not in favour of the idea that Carrefour could be bought by a foreign competitor. Now, his opinion is important in all of this because his ministry does have to sign off on any deal which affects the distribution of food here.
Now, in the United States, Stephen, an attempt to block investment in three major Chinese companies appears to have been stopped.
That's right. The Pentagon and the State Department had been pushing for three Chinese tech giants, Alibaba, Baidu and Tencent, to be added to a list of companies that have links to the Chinese military. Now, that could have meant a ban on Americans investing in those firms, which are all listed on US stock exchanges. But the US Treasury Department appears to have won an internal battle within the US government to exclude those companies from the order over fears of the economic impact of such a ban. The Defense Department is due to submit its list of Chinese firms set to be blacklisted to Congress later.
And Stephen, how are the markets digesting that?
Investors pretty relieved at that news that Alibaba, Tencent and Baidu won't be concerned. Shares of Alibaba in Hong Kong up over 4% a short time ago. A similar move in shares of Tencent. Such a ban would have meant a huge blow to both of those firms. On the markets more generally, we've got gains in Tokyo, in Hong Kong and on the Kospi in Seoul, just the Shanghai Composite dipping into the red there. Investors looking at some new figures on the Chinese economy showing that exports rose in 2020 despite the pandemic. On the currency markets, euros trading for $1.21.5 and 89 pence sterling.
Now, Stephen, the US has unveiled a new ban on cotton and also tomatoes produced in the Chinese province of Xinjiang. What's going on there?
Yeah, this is over the treatment of Uyghur Muslims in the region, where human rights groups say that up to 1 million people have been imprisoned in labour camps. The ban follows a similar move by the UK and Canada and adds to the already tense relationship between the world's two biggest economies. Cole Stangler has the details.
About a fifth of the world's cotton is produced here in the Chinese province of Xinjiang, a sector that has long faced accusations of forced labor. As of Wednesday, its products are banned from entering the United States.
We will not tolerate forced labor of any kind in US supply chains. We will continue to protect the American people and investigate credible allegations of forced labor. We will prevent goods made by forced labor from entering our country, and we demand the Chinese close their camps and stop their human rights violations.
The aggressive move, which also targets tomatoes in the region, comes a day after the UK and Canada both took steps to clamp down on imports from the area. According to the UN, around 1 million people are imprisoned at camps throughout the province, many of them from the Uyghur ethnic minority, while cases of torture, sterilization, and forced labor have all been documented. The Chinese government has denied charges of human rights abuses in Xinjiang. Earlier Wednesday, it responded to the UK's plan to ramp up scrutiny of imports.
英国等个别国家资助、炮制、刻意散布谎言谣言，以所谓人权问题为借口，污蔑抹黑中国，采取各种措施限制打压新疆企业。中方对此坚决反对。
The U.S. imported some $9 billion of cotton products from China alone last year. That figure does not include Chinese cotton used to make clothing in other countries. Those exports, too, could be affected by the new ban.
The French carmaker Renault is unveiling its new strategic plan today as sales have slumped in the past year. The company is to focus on profitability over the number of cars it sells. It's extending a cost-cutting plan announced last May with an objective of reducing 3 billion euros in costs by 2025. That includes 15,000 job cuts that were announced last year. Renault's global sales fell by more than 20% in 2020. Its rival PSA, which owns the Peugeot and Citroën brands, also had a bad year. Its sales were down by more than a quarter. Haxie, if you're in the market for a pun, Renault is calling this plan the Renaulution.
I like that very much. I'll take that forward. Finally, from you, Stephen, a call for people working at home during the pandemic to be given more rights.
This is coming from the International Labour Organization, which has been looking at the issue of people working in the home. Even before the pandemic, the ILO says that home workers counted for 8% of the global workforce, or around 260 million people. It estimates that figure has now doubled. But the organisation is warning that these workers often have poor conditions, face greater safety risks, and have less access to training. They also, on average, earn less than people working outside of the home, even in higher skilled professions. In India, Argentina, and Mexico, it can be up to 50% less. In the US, 22% less. And in the UK, it's 13% less. And we're talking about people here, not just those who are working remotely in the sort of situations we've seen this year, but people who would be manufacturing in the home, cottage industries, and all those sort of things as well. That's what the ILO report is covering.
OK, Stephen Carroll from our business desk, thank you very much.